Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on admission of partner. This is lecture number 5 and you can watch the other lectures in the playlist section of the channel. I have created this channel for the benefits of the students of commerce, and students can communicate with me through email which I have given in the description box. I would like to request all the viewers to subscribe my channel and to share it among the students of commerce who cannot afford the private tuition but want to have access to quality education. Red and white are partners in a firm sharing profits and losses in the ratio of 3:2. On 1st July 2021, the position of the firm was as follows. On liability side, we have capital account of red 1,50,000 and of white 98,000, general reserve 84,000, sundry creditors 1,70,000, and on asset side we have building 50,000, machinery 2,50,000, furniture 40,000, stock 60,000, debtors 90,000, cash 12,000. Total of asset and liability side is 5,02,000. Blue joined the firm as a partner from this date and the following terms and conditions were agreed upon. Red, white and blue will share the future profits of the firm in the ratio of 5:3:2 respectively. Blue would first pay rupees 10,000 as his share of goodwill, and this sum is to be retained in the business. The value of machinery is to be increased by rupees 20,000 and stock is to be written down by 10%. Blue would introduce such an amount of capital in cash which should be proportionate to the combined capital accounts of red and white after making all adjustments. It was decided that the capital accounts of red and white would be adjusted on the basis of blue's capital by opening current accounts. So the capital accounts of the partners and the balance sheet of the firm after blue's admission. We have prepared here the revaluation account, cash account, partners capital account and balance sheet as at 1st July 2021 after blue's admission. In the question we have the balance sheet and the balance of capital of red and white is given. So here I am writing by balance BD and the capital of red is given as 1,50,000 and the capital of white is given as 98,000. The second figure is the general reserve and the balance of general reserve is 84,000. So I am going to divide the balance of general reserve between red and white in the ratio of 3:2. So general reserve 84,000 I am going to divide is between red and white in 3:2. So red is going to get 50,400 and white is going to get 33,600. The next figure is regarding the sundry creditor. So I am going to place it in the balance sheet. So this is the structure of the balance sheet and I am going to write the balance of sundry creditor on the liability side and the balance given is rupees 1,70,000. Next figure given in the balance sheet is regarding the balance of building. So there is no revaluation regarding the valuation of building. So I am writing here in the balance sheet building rupees 50,000. The next figure given in the balance sheet is the machinery. And there is an adjustment with machinery that there is a revaluation of machinery and it is going to be increased by 20,000. So in revaluation account I am writing by machinery account rupees 20,000 and in balance sheet I am writing machinery opening balance rupees 2,50,000 and there is an increase in the value of machinery by 20,000. So the final figure will be 2,70,000. The next figure is the furniture. So the balance of furniture given in the balance sheet is rupees 40,000. So in the balance sheet I am writing furniture 40,000. The next figure is regarding the stock. In the balance sheet is given the stock to be 60,000, but there is an adjustment and there is a revaluation of stock and there is a decrease in the value of stock by 10%. So in revaluation account I am writing revaluation account debit to stock 10% of, that is 6,000. 10% of 60,000 is rupees 6,000. So in balance sheet I have to write stock 60,000 is the opening balance and there is a devaluation of stock by 6,000. So the final figure of stock is 54,000. The next figure given in the balance sheet is regarding the balance of debtor, and the debtor balance given in the balance sheet is rupees 90,000. Since there is no adjustment, so I have written in the balance sheet debtor 90,000. The next balance is regarding the cash, rupees 12,000. I have opened here the ledger of cash, so I am writing here to balance BD rupees 12,000. Here I am doing a small working regarding the calculation of sacrificing ratio. So red and white are the two existing partner and blue is going to be admitted as a new partner. So old PL ratio given is 3:2, that is 3/5 and 2/5. And the new PL ratio is 5:3:2, that is 5/10, 3/10 and 2/10. So what is the sacrificing ratio? Sacrificing ratio of red and white. So 3/5 minus 5/10. So this will be 10. 6 minus 5, that is 1/10. And 2/5 minus 3/10. So the sacrificing ratio between red and white is 1:1. It is given in the question that blue is going to bring rupees 10,000 as his share of goodwill. So this amount of rupees 10,000 will be distributed between red and white in sacrificing ratio. So in partners capital account, I am going to give the impact of this journal entry, that is cash account debit to partners capital account, that is old partners capital account 10,000. So in partners capital account I am writing by cash account, and 10,000 will be divided between red and white in 1:1. So 5,000 each will get. And in cash account I have to write to partners capital account. Red 5,000 and white 5,000. The next adjustment given is regarding the revaluation of machinery and stock that I have already incorporated. So I am going to close the revaluation account, and there is a profit on revaluation of rupees 14,000. So this 14,000 will be distributed between red and white in the ratio of 3:2. So here I am writing in revaluation account to partners capital account. Red 8,400 and white 5,600. So profit on revaluation of 14,000 is distributed between red and white in the ratio of 3:2. So in partners capital account I am writing by revaluation account 8,400 and 5,600. it is given in the question that blue would introduce such an amount of capital in cash which should be proportionate to the combined capital account of red and white after making all adjustment. So we have already covered the balance sheet that is given in the question. We have written the balance of capital, general reserve, sundry creditor, building. We have revalued the balance of machinery and stock, and we have incorporated these balances in different places, either in revaluation account or in cash account or in the partner's capital account or in the balance sheet that we are going to prepare after Blue's admission. Now the question is, what will be the amount of capital that Blue is required to bring after his admission? The total of the red and white's capital is 3,56,000. If you add up these two columns, you will get 3,56,000. So 3,56,000 is the balance of capital of red and white. Now, the new PL ratio is 5:3:2, which means that red and white together controls 80%. So this 3,56,000 represents 8/10 share. So what is the capital of the firm? So capital of the firm is 3,56,000 into 10/8, because 3,56,000 is the balance of red and white. So I have multiplied it by 10/8. So this will be the capital of the firm, and the capital of the firm will be 4,45,000. So share of red in the capital will be 5/10 into 4,45,000. This will be 2,22,500. Share of white will be 3/10 into 4,45,000. So this will be 1,33,500. And blue, share of blue is 2/10 into 4,45,000. So this will be rupees 89,000. So blue is required to bring rupees 89,000 towards his capital of the firm. So here I have to write in the partner's capital account, by cash 89,000, and I have to write the balance of capital here as two balance CD, 2,22,500, 1,33,500 and 89,000. There is a balancing figure on the credit side. So here I am writing by red's current account 8,700. It is given in the question that it was decided that the capital account of red and white would be adjusted on the basis of blue's capital by opening current account. So 2,25,500 will be the share of red in the capital of the firm. So he is supposed to bring 8,700 towards its capital, and white is having a surplus amount in his balance, so he will be paid off 8,700, but we are not paying him off right now, rather we are transferring the balance to his current account. So here I am writing to white's current account 8,700. 2,22,500 is the sum total of debit and credit side of red. 89,000 is the total of the column of blue, and total of white's column is 1,42,200. So in cash account I have to write to blue's capital account. Blue has to bring 89,000 as his capital. So total of cash is 1,11,000. So here I am writing by balance CD 1,11,000. So this is the ledger of cash. We have already completed the revaluation account, the cash account, and the partner's capital account. Now we are going to place, now we are going to write the capital of red 2,22,500 in the balance sheet. The capital of white is 1,33,500 and that of blue is 89,000. White's current account, I have to write white's current account is 8,700 and the red's current account is 8,700, which is a debit balance. So the total of the asset and liability side is 6,23,700. A very important part of this question is to determine the capital of the firm. So we have calculated the balance of the red and white and we have calculated it as 3,56,000 after all the adjustment regarding the opening capital, then regarding the opening balance of red and white, then the distribution of general reserve, the amount that was given by blue towards his share in goodwill, rupees 10,000, which was distributed between red and white in the sacrificing ratio as 5,000 each, and the profit on revaluation of 14,000. So sum total of this balance we have calculated at 3,56,000. Since red and white share in the firm is 80%, so the value of the firm I have calculated it at 3,56,000 into 10 by 8. So the total capital of the firm is 4,45,000, which is to be divided between the red, white and blue. So red is going to get a balance of, so red is required to keep a balance of rupees 2,22,500. White has to keep a balance of 1,33,500 and the balance of blue is 89,000, and this is the amount of capital he has to bring after his admission. So in the partner's capital account, I have recorded the balance of share capital here and the amount of blue that he is required to bring, that is 89,000. So we find a balance on the credit side in the red column, that is 8,700. So he is supposed to bring this amount as his capital. So I have adjusted it against red's current account. Similarly, I got a balance of 8,700 in the white's column. So I have transferred this balance to white's current account. So after incorporating this adjustment, we have to prepare the closing balance sheet, that is the balance sheet after blue's admission. Thank you. Thanks for watching the lecture.